Take one. Another episode. I want to say this is episode 5. I was not feeling 100%, so and I don't know if we agreed on doing a weekend one or not, but Christian obviously put one in my calendar. I apologize, I could not make it. But I hope you're not too disappointed. We are here now. How are you, Christian?
Yes, very good, thank you. A really good weekend. All refreshed and ready to go for a big week. Yourself, how are you?
Yeah, good. I know you went to watch the game. I don't watch a lot of the sports, but I know the outcome of that match. I have already set up the Google the sort of reminder for the sport, so I can relate to you on another front. So 4-2, I think that was a good game, wasn't it?
It was a very, very good game. Yes, that's 3 wins in a row now. So we're doing well. 5th or 6th in the league.
Two goals in the added time. 92, 97.
92 and 97. We were tempted to leave early and go and miss the traffic, but I'm glad we didn't in the end. It was very good, very good atmosphere.
I don't know if you have a topic, but I do have something in mind. If you want, we can go with yours or with mine.
Let's go with yours.
All right. I wanted to talk about my experience. I moved to the UK back in 2004. I want to say 14. Yeah, that was 2014, summer of 2014. I never forget it because I remember sitting in these double-decker buses in London, and everybody was complaining about this massive heat wave in London, and the city or the country was not prepared for this. It was a very, very hot summer. Anyways, I came to know about a buy-to-let, and I just don't know if everybody knows this. I think in one of the other episodes, which I encourage people to go and watch, I talked about how my father talks about, like, I did not know that this was an option, and I wonder if people know that you can buy property in the UK, especially with buy-to-let, as a non-resident. Maybe you think it's normal, but do you know this, Christian, as an Englishman, that this is not an option everywhere in the world? You cannot just go and buy property anywhere in the world. Like Dubai is unique, here it's unique. Yes, you can do it in Spain and some of the other European countries. Is this totally normal to you that any person can buy a property here in the UK?
To be honest with you, it's only struck home over the course of the last 6 months, really, when we've gone abroad and we're talking to people about the ability to do it, and the look of surprise on people's faces. Prior to that, with just being a typical I don't know if ignorant is too strong a word, but it's probably right. British person, assuming that whatever happens in the UK happens in the rest of the world. No, I honestly thought it was something that can be done wherever you are in the world, and I didn't realise that what we have to offer here in the UK is actually quite a big opportunity, not just for UK residents, but for everyone around the world to be able to invest and be able to get such big buy-to-let mortgages.
Yeah, I mean, this is it. I don't know, like, when I would like to think that you're referring to our most recent experience traveling to Dubai together. I don't know what is more surprising to people. The fact that as a non-resident, as a not UK citizen, as a citizen of the world, you can buy property here, or the fact that you can get up to 75% mortgage, again, as a non-UK resident. Like, as a person who is living anywhere else in the world, the majority of client being from Africa, being from Middle East, from India, China is a big market for us. Like, anybody can buy property here and they can do those two things. I don't know. Like, did you have any observation? What do you think is more shocking to people? The fact that they can buy property here, or the fact that they can get a mortgage here as a non-UK resident?
Unquestionably the mortgage piece, isn't it? I think everyone was probably aware that they could buy UK property, but they didn't think it was something that was achievable, because I think that the viewpoint is that they had to buy that property in cash, and therefore did they have enough money to do so? When there's that realization that you can get up to 75% loan for the property mortgage, then that's the game changer, really, isn't it? That then means for a £50,000 investment, you can buy a £200,000 property. or you can buy multiple units, which a lot of clients do with ourselves. And yeah, it's definitely more about the ability to get a mortgage than the ability to buy a property in the UK. And it's about getting that education out there to our client base. We're very keen on the educational piece, in terms of not just a case of we're here to find a client the right property, but to work on their property strategy, to work on the ability to use that bank finance. And at the end of the day as well, we're looking at mortgage rates between 4 and 6%, relatively low price of borrowing compared to a lot of the world. And when you can get rental yields on long-term let between 8 to 10%, short-term lets over 20%, then yeah, it's worthwhile exploring those options with us, isn't it?
Well, I'm sorry, I may have to brag a little bit about your qualification and background, but can you talk a little bit about? I know you were CMAP qualified. I know you were independent financial advisor in the past. Can you tell us, like, why does anybody have to, in the nicest possible way, to you?
Yeah, in terms of the ability to become an independent financial advisor in the UK, I mean, I was relatively fortunate how I came about it. I came out of university and went to as a temp, basically, at Barclays, and subsequently then got a job at Close Brothers, who literally saw the potential in me, and I was a trainee financial advisor whilst doing my CII qualifications, which is degree equivalent, basically. So it's 2 years worth of study, and then CF6, which is CMAP on top of that, which is the mortgage broker qualification. But it is, yeah, it's something that is quite. If you say to a UK person that you're an independent financial advisor, they know that you've gone through that regulatory process, the exam process, and you're trusted then in that regard, because you're not anyone just walking off the street into the industry, without obviously that skills and that qualification. And yeah, it's certainly stood me in good stead over the years. We're talking since I was qualified now, best part of 20 years.
Yeah, well, that does seem like a very long time. Do
Yeah.
you? I mean, this might sound like a bit of a strange question, but over my years, given that I come from Middle East, with certain generation, like specifically certain generation, maybe my dad and maybe that age bracket, there is a bit of a stigma or fear, if you will, around debt and and loan. And we often use the word mortgage here, but I think I told you this before. Some people may not use that terminology. Mortgage, loan, the money that you borrow to pay for something called a house, a home, or a
Yeah.
property.
Yeah.
Do you is that I know it's very normal here, but have you ever come across anybody here in the UK that has a bit of a fear around getting mortgage, and that, especially I'm not talking about primary residence for investment. Do you think people are fearful of that and what the consequences can be?
I think there's always naturally going to be some people that are fearful about it. At the end of the day, it's all based upon a risk spectrum, isn't it? So you've got from risk averse to high risk. If you're ultra risk averse, you perhaps don't want to have any leverage, you don't want to gear in any kind of way, and you want to purchase in cash. Having said that, that is a very, very minute amount of people. The vast majority of UK buy-to-let property purchasers will buy with a mortgage, and they will typically buy with as high loan to value as possible, because it is all about that ability to leverage. If you can buy 2 or 3 properties with your capital, with leverage in, why wouldn't you do that? Why wouldn't you have 3 lots of rental income, 3 lots of capital growth? People in the UK, it's fair to say they've grown up knowing that the property that they're living in, the house that they live in, has gone up considerably in value. They've lived through small periods of time where it may have gone down, but over the long term, it's always consistently gone up. They've seen that supply and demand has always gone up in terms of demand is outstripping supply. So we're a nation with an increase in population, with an aging demographic, still with the viewpoint that we all aspirationally we always want to own property, and if we can own more than one, then that's what the UK people want to do. We see the benefit. We see that safety and security in terms of an investment, your money is safe and secure. And in the long term, it's always going to go up, and it's going to generate you a really, really nice rental return as well. So, to answer the question, I think there isn't concern in having a mortgage with 90% plus of UK clients, because they know, as I say, that property values are always going to increase, so they're going to benefit from capital growth, and they want to build that property portfolio.
This might sound a bit of an odd thing to say or ask, but do you see how, for example, if you're an average Nigerian citizen, and I say that because we deal with a lot of our clients are from Nigeria. Special hello to all of you guys. But can you see how it might be a little bit questionable, like almost too good to be true? Like, if I'm not living there, if I don't, if I don't have any ties to the country, if I'm not a taxpayer, if my salary, my job, and everything is in Naira and I live in Nigeria, how can I be entitled to get a mortgage? Do you see how it can raise some question for people? Like I said, how do you address that? How can people get over that this is too good to be true sort of feeling?
It's a really good question, because we have had that response, haven't we, from clients, whether or not that they say it out loud, or they intimate it, or you can just tell they're thinking this is too good to be true. The only thing I guess I can respond to that is the fact that many thousands of international clients are buying property with us, with other companies, on a regular basis, without any concerns, without any problems. And the bottom line is that mortgage is a mortgage on the property, and you're not assessed as an individual. So it's the ability for the property to be able to pay that mortgage back. And when I say the property, I mean the tenant that's going to be in the property, whether it's on a long-term let or a short-term let basis. The lender is assessing the risk base upon will the amount of money generated from the property, from the tenants staying in the property, be able to repay the mortgage, and will there be surplus should there be any void periods. And because the UK property market is so strong, the rental market is so strong, on, I want to say 9 out of 10 occasions, but it's 10 out of 10 occasions, the property will always be able to service that debt and produce a profit for the investor. So whilst it may seem too good to be true, it's just because of the strength of the UK property market that allows people to think that. But to conclude, it's not a case where it's too good to be true. It is just too good.
Sure. And I think some people may argue, doesn't I'm going to try to keep it under just around 15 minutes, so maybe answer this one shortly. We will go more into that, because I think this is a topic of interest for a lot of people. But wouldn't you say that the interest that you pay on a mortgage, doesn't that eat into your profit, and possibly may have like a too much of a huge negative impact, that at the end you come out of it, worse off?
Well, again, this is the beauty of the stability of the UK economy, is that we keep interest rates low. And again, I'm saying low in terms of comparatively low to a lot of the nations in which we have investors from, the likes of a Nigeria, for example. If we had a conversation now with a Nigerian client and said that the UK panic when interest rates get above 5%, they would laugh at us a little bit, because of the inflation and the interest rates that that are there. So in terms of, does it impact the return on the investment? Well, it gives us the ability to actually get into the investment in the first place, and as I say, to leverage and to buy more property. So you would rather be paying 4-5% interest on a property, on 2-3 properties, or even on one property, and actually have the ability to have that property, than to not pay 4-5% and not have the ability to have it. So it's a means to an end, but it's at a low rate, and with such good yields available in the UK, you're still then able to get the benefit of significant capital growth, and the difference between a 6, 7, 8, 9, 10% yield minus the 4-5% interest rate, you're still getting a net return of 4 to 6%, plus the significant capital growth that can be between 6 to 10% every single year. So when you're accumulating the capital growth and the rental income, when you put them together, you're looking at double-digit returns in a secure environment. Well, the UK, I think, has coined the phrase "safe as houses" for a reason. If you're looking to put your capital anywhere, putting it into UK property is the safest place to go.
Thank you very much, Christian. We're going to be keeping it short and sweet. Appreciate it. And yeah, see you guys tomorrow.
Thank you very much. Hope everyone has a great day.